Today I'm going to tell you about QE and QE2. No, not the Queen. No, not the ship. QE stands for Quantitative Easing. It's a way of trying to stimulate the economy when all else fails. Here's how it works. A central bank effectively creates money out of thin air and uses it to buy assets from banks. That pumps cash into the banks and increases the value of their assets. In theory, it helps stop the banks go broke and gives them more money to lend. QE is often called printing money, but that's a misnomer. The money's not printed, it's just notional, created by keystrokes, an item in a ledger. After Ben Bernanke and the US Fed cut interest rates to zero and the US was still in recession, they turned to QE. But it's not clear whether it worked.
I actually don't think that quantitative easing really works because a number of countries have tried it. Think of Japan, think of Britain, think of the US. They've pumped in billions of yen and dollars and pound sterling into their economies with limited success because the recovery simply didn't occur.
The problem was the banks tended to hoard the money to shore up their own balance sheets. They didn't lend all that much of it. And after the biggest debt binge in world history, there wasn't that much demand for lending. So it was like pushing on a string. But without QE, maybe it would have been even worse.
Money makes the world go around.
Critics fear QE will create dangerous inflation, like the hyperinflation in Germany during the Weimar Republic, which contributed to the rise of fascism. Or short of that, stagflation, that stagnant growth with soaring prices. But at the moment at least, deflation seems to be the bigger threat as Europe plummets into recession. You don't get price surges when there's mass unemployment and bugger all demand. QE and QED.
Money, 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 money.